Definitely, it's a headline risk and a political risk here, but a lot of what we are seeing today seems to be a little bit of a knee-jerk reaction. When we look at the semiconductor space overall, we don't think China has a lot of the technologies in-house to supply their own demands. So when you look at automotive, EV, or processors, or analog, or even memory, they really don't have the capacity or the capability to supply that in-house. So they'll have to depend on many of the U.S. suppliers, at least in the next 2 to 5 years. Also, when we talk to many of our companies here, there's obviously concern, but it has not shown up in any change in demand or outlook for any of the semi guys, except for, I would say, ZTE, where there was a very specific shutdown in that case.
You know, Secretary Mnuchin has disputed reports that came out over the weekend that the administration was preparing to put in place impediments to Chinese investment in semiconductor companies and other technology companies, saying that whatever happens will be applied more broadly than just in the cases, in the specific instance of China. Do you think that is what is behind this here? I mean, you say that the fundamentals are going to be strong no matter what happens on that front.
Yeah, I think when you look at many of the stocks names we look at, on semiconductor, Cypress, even Autoliv, the big secular trend is towards safety and automotive mandates with ADAS and EV, even names like Avago. So we think there's a much stronger underlying theme in terms of technology and demand that's coming through. Sure, in the near term, some of these tariffs definitely create concerns and headline risk. But longer time, we see demand signals pretty much intact.
You know, Vitay, whether or not this report out of the Wall Street Journal about a 2-track CFIUS program is true or not, I mean, the Chinese could put up barriers to mergers of companies that are not Chinese, as we've seen or might see with Qualcomm and NXPI. Is there a concern within the sector that consolidation could actually be hampered just because the Chinese could reject a deal?
Yeah, I think we are already seeing that in the last year and a half, where there has been a slowdown in cross-border M&A and has taken some of the premium out of the semiconductor names. But on the flip side, I think it still is something. When you look at the overall market, there's still that demand signals are still intact. We think consolidation M&A aside, you still see fundamentals pretty strong. But you're right, from a CFIUS standpoint, we have seen a little bit more, focus on some of these security issues, and some of the cross-border M&A slow down a little bit. But that's, we think, is already reflected in many of these names, because in the past 6-9 months, you're not seen, or even longer than that, in the last year, you're not seen any major cross-border M&A, and so that that premium has come off already.
Vitay, just based on your discussions with management in the industry, how much of a concern is the forced technology transfer from China for these semiconductors, the intellectual property theft? I would think that they would be fairly supportive of at least the president's motives on this front.
Yeah, I mean, I think if you look at IP in general for the technology industry, is always a concern. So, I think tech firms have always, moved ahead to protect their IP, and I think that is always the secret sauce that drives profitability. So, I think it's a double-edged sword, and I think, but I think you're seeing, tech companies in general have been very aggressive to protect IP, and that will always be the case.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.